Good day, everyone. Welcome to a new episode on Market Perspectives. We have with us today Ashish Ranawade, Head of Products, Emkay Wealth Management. Welcome to the show, Ashish.
Thank you.
What is your take on the current global macroeconomic situation?
We are in a high inflationary situation right now, and the Fed and most central banks across the world are increasing interest rates trying to tackle the inflation situation. And I think it's the US which is facing a tough task because the inflation there has been very sticky, and although it's come down significantly over the last 1 year, there is still a long way to go, going by the Fed target of 2%. So looks like that, interest rates are going to stay higher for longer, and maybe one or two more hikes from the Fed. Now, obviously, this is leading to a slowdown, and calendar year 23 was expected that the global growth will slow down to 2.8%. But the good news is that this is pretty much the bottom as far as the global growth is concerned. We are expecting that next year growth should bounce back because to somewhere around 3%. And that's because many of the emerging market and developing countries have actually seen inflation come off, and the case being India, where we have seen inflation come under control, and the central bank has pretty much halted hiking interest rates.
We have seen manufacturing as an opportunity in India. How do you see global manufacturing vis-a-vis domestic manufacturing growth?
One of the reasons why I feel the government has been pushing manufacturing in India is because we have a lot of resources domestically. We have a young, demographic profile, a young workforce, and also if you see elsewhere in the world, wages are moving higher, cost of production is moving higher. And so from that perspective, India offers a very attractive, alternative to the world as far as manufacturing is concerned. And I think COVID has made everybody in the developed world realize that you can't depend only on China or one or two countries. You need to be diversified in terms of your manufacturing basis. And I think that has made India as and of course the government impetus, or rather the policies which are promoting make in India as a concept. And it's been quite some time that we've been saying that things should be manufactured in India. Now, when you're manufacturing in India, again, there are two elements to it: manufacturing in India for the world, and manufacturing in India for the domestic consumer population. And I think both places we have seen that there is plenty of opportunities. There have been some multinationals, for instance, like Whirlpool, which have decided to make India their manufacturing base for the whole of the world. And also on the other side, Apple, which started manufacturing in India for the Indian consumer population, which is huge in terms of consumption of iPhones. So I think from both perspectives, we are seeing a good runway as far as manufacturing is concerned.
While we have outperformed global markets, how do you see foreign flows into the country?
So globally, if you look at 2023 calendar year and 2024, the next calendar year, India is standing out tall in terms of GDP growth. And also the incentives the government has provided, the kind of money the government is spending in terms of infrastructure creation, etc. There is good amount of growth which is happening in India today. And corporate profitability has also been going up. And clearly, when you are a fund manager sitting in New York or London or anywhere else in the world, when you try to find out what are the pockets of growth which are there across the world, India stands out tall. And I think it's not going to be very difficult for India to attract global flows if this situation indeed plays out the way it is expected to be. So very positive as far as foreign funds flow are concerned.
Your take on the banking sector?
So banking sector per se is in good shape. The banks are in very good shape at this point in time, very strong balance sheets. And because of the growth the economy is experiencing, the credit growth for the banking sector, both from the consumer side as well as the industrial side, has been good. And I think that's good news as far as banks are concerned. And also from an interest rate perspective, at this point in time, we probably are at the peak in terms of rates. So going forward, it's just a matter of time. Rates start going down, so that will further propel, demand for credit, etc. So I think banking per se at this point in time, definitely, over the next 6 to 8 months, could, is a sector one should look at.
What's your approach to the right stocks to invest in the current situation?
We feel that the market's slightly on the expensive side as compared to the historical averages, but as I said earlier, manufacturing is an area where there is the sky is the limit, and the kind of deals which we are seeing, foreign companies coming and setting up manufacturing bases in India, Indian companies setting up capacities to manufacture for the world. And so this is happening in electronics, this is happening in consumer durables, this is happening in textiles. Chemicals and pharmaceuticals has always been India's forte. So also defense and railways are huge consumers of equipment, and those two engines have also started firing. So we are very bullish on manufacturing, and I think there are various sectors within manufacturing, subsectors within manufacturing, which one can look at. Also, the small and micro caps were neglected as far as India was concerned. I think over the last 5 years, Indian investors have been predominantly investing in large caps, blue chips. I mean, you talk to a lot of HNI clients and investors investing in equity markets. They say, we want to be in only blue chips. I think the volatility and the uncertainty in terms of the cash flows as far as the small and mid caps are concerned. Also in terms of the quality of management, there was a lot of concerns from the investors. But I think a lot of that has changed, and I think the regulators and the exchanges also made sure that there is a good amount of dissemination of information to investors. So the exchange filings which are happening from smaller companies, I think a lot has changed in the last I would say 4 to 5 years, and which is why it makes me more confident today to look at the long tail which exists as far as the small and micro caps is concerned. Virtually everything less than 250, if you exclude the top 250 companies, it's all small and micro caps, and I think this is huge opportunity out there.
Great. Thank you so much for your insights, Ashish. Thank you, viewers, for being with us on this episode on Market Perspectives. Till we meet again for another one.